Thank you, Mr. Chairman. Thanks to both of you for your testimony. I'm not an economist, so I'm not going to delve into deep economic theory, but in listening, Dr. Gravel, to you indicating in your statement that other countries might lower their corporate tax rates if we lowered ours, is that not a good thing? I mean,
well,
I almost came to the conclusion that you thought it would be in their benefit to raise their tax rates, that it would have less of a negative effect by raising than lowering. And I'm please help me sort that thinking out.
Well, first is the reason that we should be concerned about other countries lowering their tax rates from our perspective is that if they do that, any gains in capital flows that we're attracting from them are going to be lessened. So that's why it's important. And also I guess what's the worldwide lowering of capital gains, of tax rates on corporate income, first was caused by the United States. I think most people would say, I certainly would say, in our '86 tax rate cut.
But 35 countries that we compete with around the world have lowered their rates from a previous average of 48% to now the current average of 25%. Are all their analysts and economists and policy makers wrong?
I said to the people at the OECD, I said, why don't you put some numbers on this? I mean, they did a presentation. We said corporate taxes need to be lowered. I said, well, where's the numbers? That's what I did. I mean, I tried to estimate as best I could what the effects would be. And you're just not going to have dramatic effects from something that's so small relative to the economy.
Well,
it's just not reasonable to think so.
Well, isn't at least some effect if it's not dramatic? Isn't some effect positive? Rather
well, the effect I found was positive. It was just very small.
Well,
it was almost.
These days we're looking for small stuff. Right? I mean, anything we can get.
I guess the other question you have to ask is, I think that's fine. I mean, I'm not opposed or supportive of keeping the corporate tax where it is or lowering it, but I think that one has to be concerned about replacing the revenues. And so you have to decide how you're going to do that.
But why do you think our 35 competitors globally all came to a different conclusion than you have?
I don't know, because maybe they had multinationals lobbying them who succeeded. I don't know. But I do know that this kind of analysis that I've done has not happened when those countries were making their decisions.
Well, then why wouldn't they then raise their rates back up if they've seen that it hasn't had a positive effect? I mean, I almost take from your testimony that you think raising our corporate tax rate would have less of a negative effect than lowering it.
Well, probably if you raised our corporate tax rate and used the revenues to reduce the deficit, it would. I mean, what you do about the deficit is very important.
But what about our competition worldwide with the 35 other countries?
What about it? I mean, what is the problem?
The problem is that our corporations, as Dr. Hassett said, are paying double taxes. They're paying taxes on earnings, and then the stockholders are paying taxes on dividends.
Well, that happens
we're not competitive with the rest of the world, and our money's flowing out to these
That happens in any country that has a classic corporate tax. I mean, but I don't know why other countries made their choices. The impression I have with European countries is that they are they have much more mobile capital. They're much more worried because they're like, they're right next to each other, and they felt also some concerns about plants moving to the new Eastern Bloc countries. We are separated in lots of ways, in ways that they aren't.
Do you ever contemplate the fact that, if 35 of our competitors are, and I think a pretty solid majority of Americans feel that lower corporate tax rates are better, that you want maybe re-examine your theories?
Senator, I put infinite elasticities in this model. They can't get any higher than infinity. And still, I got an effect, but I didn't get a large effect. And I didn't get a large effect because real capital flows are constrained by the economic circumstances, by your preferences for products, by your labor supplies, by what you combine it with. That's what the model says, and it's a reasonable model.
Let me ask, my time's running out. Let me ask Dr. Hassett to tell me where I'm off base here.
Yeah, I just would like to add that the way I think that an economist should go about addressing your question is, or as a scientist, any scientist, is that we have, models are naturally very, very simple. That they have to be, because that's why it's a model. You can't model the whole world. There are just too many variables. And that when the model is inconsistent with observation, then you question both the observation and the model. And I think that it's appropriate to do both. And I think that the model might be wrong, the observation might be wrong, but the sort of some humility about the both possibilities is something that I think I don't see in the CRS report. And that's my one criticism of it. That I think that it's prior on its way of looking at the world being the correct one it's doesn't adjust as new evidence comes in, at least as much as I would do if I were doing the exercise.
Just a last question, my time is up. But do you think you obviously think it tilts in a different direction?
Yes, I'm much more of just an empirical economist, and I look at the data and use traditional econometric techniques to see what the data tell me, and then I talk to you about what I think I find, and sometimes you like it and sometimes you don't. But I'm not a person who spent as much time with the general equilibrium type models that Gravel uses. Those models are often very useful for thinking about effects you wouldn't have thought of and helping you think about what regressions to run. And so it's not that those models have no use, but I think that in this particular application, there's just so much in the world. I talk about this a little in my testimony, that if you believe the Laffer curve results that Brill and I have and the wages results that Aparna and I have, then everything else that's going on in the world, and I list a bunch of things, kind of makes sense. And if you don't believe it, and if the CRS is right and our reports are incorrect, then it creates a lot of puzzles like those that you were addressing.
I just wonder why all the rest of the world's coming to a different conclusion than Dr. Gravel, but in any event, my time is up.
Thank you, Senator. Representative Mulvaney.